Dr. Salman, firstly, officially also would love to welcome you for this webinar and thank you for taking your time out. And I've done more than 50 such webinars and hosted so many people, but I think you are the star of the series because each time I learn a lot, but also your calls have been contrarian and they have been right and they have been massively contrarian. You know, when oil was going negative, you were saying it will go to 80. When markets were, going down, you were positive. So you were saying, then last time you came, I remember you spoke that there will be a race for vaccination versus the virus. And that's exactly what we have been seeing. And you spoke about how it will lead to differentiation in performance of markets and exactly the kind of thing which we have seen. So, not only has it been a learning experience talking to you, but I'm sure a lot of people have made money by following your calls and your recommendations, which were deeply contrarian. So, thank you for your time, and thank you for this. And in this session, in particular, you have written this seminal work which analyzes the impact of climate change and on investing. And while people do hear about ESG and we do hear about climate change, but I think the empirical link between those two has been missing so far. So I think your work is one of the first works in which has done that. So firstly, would love to hear about that in terms of what your findings are on how climate change impacts us. Because for a lot of people, especially perhaps because of Trump, they think that climate change is still a very fluffy, high-level thing, which might not be real and might not have a real impact on investment. But your research shows that it is real. So we would love to hear that. And then, of course, I'm really interested in asking your views on global markets, on commodities, on oil, and then also on Pakistan. So perhaps we can kick off with that. If you can tell us a bit about your work, your paper on climate change and investing in emerging markets.
Thank you very much, Alibhai. And firstly, thank you very much for that very generous introduction. Really appreciate that. So I guess I can start with this work we did. You mentioned it's a study we published recently, and it's part of a 3-part study which we are doing at Fidelity International, and it's as you rightly pointed out, over the last few years. Focus on climate change has increased significantly, especially in the developed world. And I would add China to that as well. I think it's not that understood that how serious China is about climate change and the dynamics around it. But what has been missing is how do you analytically think about this issue, because it is such a long-term issue, at least from a science perspective. It has its own multi-dimensional uncertainty, which is built into those projections. But then once you have climate science telling us something, then there's the question of how to link it with the projections of the macroeconomy, and from there on, what's the prospect for expected risk and return profiles. Just to give you a little bit of context on what is the exact area we are interested in as investors. It's really expected risk and returns, because they underpin what we call strategic asset allocation frameworks, and that's how we design asset allocation policies for our strategic investors, especially institutional investors, and even in the wealth space. A lot of the modeling on which mixes equities with bonds is underpinned by these projections. So what we did was we looked at, rather than going towards the marketing spiel of it that climate change is so important, we basically looked at the science itself, and some of those key studies which have come on the table over the last few years. There are 3 or 4 of them, and there are more and more coming now online, which link climate science to macro variables of interest. And here it's GDP profiles. And I'll be honest with you, when we looked into these details 6 months ago, we were shocked by by some of those projections. And of course, this is a science of uncertainty, and one has to understand assumptions which are being made. But as I will share with you shortly, we think those assumptions which are being made are actually on the conservative side. And the reason why people are unable to fully model the impact of climate change on economies is because of the complexity, both from a timeline and the magnitude of effect perspective. And I'll discuss a little bit about the timelines issue a little bit later as well. So if you go through the paper, the language around this analysis is also getting tighter. So let me just lay it out in very simple form. So you have human activity, which is creating emissions. And that is the only variable which matters in climate science, which is, that is the only variable that matters in climate science where humans have an influence over, which is emissions. And from emissions, climate science maps temperature pathways for the planet, and that jump from emissions to, or the link between emissions to temperature pathways, is where climate science is focused on. And there are a lot of models. IPCC is the one which collates those models. You can make different assumptions, like with economics or any other field. You can think about different modeling techniques of that. But I think one thing which the science, climate science agrees on, is the geographical impact of these increasing temperature pathways, even if there is still disagreement about exactly how warm the planet will become. But I think the consensus, as the science gets tighter, is that yes, temperatures will rise. One can argue whether it goes 4C, 5C, or whatever, and it matters, right? I mean, for that science, it's a very important question. But the geographical spread of the temperature pathways is much more concrete, and that's where we basically then link temperature pathways onto GDP profiles versus some baseline. The baselines can be constructed by Cobb-Douglas models. There's the standard techniques, but then you can shock them through a link between temperature and productivity. And that's where one of the very important studies is Berg, Siang, and Miguel. This is a Stanford study which came out in 2015. It's one of the more aggressive damage functions which link temperature pathways to what will be the impact on output losses, if you will. And that's what's called physical risk of climate change. So quite a few things jump out of it. The first one is that globally, you're talking about 20 to 25% below trend GDP if emissions continue on current trajectories. This is also called the RCP 8.5 scenario in climate science. So emissions continue to grow at the pace of last 20 years. And then you have temperature pathways which are coming out of that. And then this Berg-Siang model links temperature pathways with economic output projections. The second, so that's at the top level. The second key conclusion which comes in, and I think that is the one which has less uncertainty around it, because I think the temperature pathways projections are still have a very wide corridor of uncertainty around themselves, i.e. in terms of the mean projections. But the geographical spread of the losses is something where there is more certainty. And the numbers according to the Berg-Siang model are shocking to put it lightly. So by 2100, Pakistan and India are completely wiped out, according to these projections. So you are looking at losses of 80 to 90% versus trend baselines. Bangladesh, Pakistan, India, some countries in Africa and Latin America, like Brazil, are near wiped out. And then in China, you're looking at 40 to 45% losses coming through due to physical risks. Now, you can argue these are sensational results, but the model which has been calibrated by Berg-Siang basically looks at productivity, the link between productivity and temperature pathways, calibrated over data since 1960. So, and then there's a modeling of arable land availability. There's a modeling of capital availability as a result of as a function of temperature. As I said, it's one of the more aggressive damage functions there. There's another one, modest one, which is not that aggressive, but it doesn't make it's much more simpler in its formulation. However, even if we focus on the Berg-Siang model, it does not have any space for non-linear effects coming from weather. So you're talking about only chronic increases in temperatures. You're not talking about tipping point effects, non-linear flooding risks. You're not talking about those kind of weather events. You're just talking about chronic increases in temperature. So we looked at those numbers, we took them into our capital market assumptions machinery and fed them through. And basically, what we found was for long-term investors, there's no case to be an EM. So if you have a horizon of 20-year plus, with these kind of projections where the economies are collapsing due to physical risks, as a long-term investor, it's very difficult to justify why you should have any kind of exposure there. Of course, this brings the timeline question into play, because most of these projections are showing an exponential increase in damage after 2050, whilst very minimal damage by 2050, which in itself is a problem, because even though you have a like a high-speed truck coming in, just because it's very far away, it's discounted. But one thing is clear, that we will have to have a view on climate change pathways if we are serious about it, and we want to talk like analytically about it rather than just saying it's important. And the geographical element of climate science cannot be ignored. RCP 8.5 is a very extreme scenario because it assumes that carbon emissions don't come down. And we know, at least in the developed world and in China, that probably is not the case. There's a lot of, as you know, focus on policies to bring emissions down. There's a lot of focus on solutions, climate adaptation solutions. We are also focused on investing in technologies which will help reduce emissions. But that's where it brings us into transition risk, which is what policymakers and the private sector can do to bring these emissions down so that those temperature pathways do not come into play or do not realize. So we are creating a proper scenario architecture around our capital market assumption machinery. We are working very closely with NGFS, which is Network for Greening of Financial System, which is a body of all the major central banks and supervisors, and I hope Pakistan will join them because there's a lot of detailed work going on. And that work is being wired into climate stress tests by key central banks. We are going to wire it into our capital market assumption machinery and advise investors on the back of it. Especially long-term investors, because this is relevant for them, and of course those who are accessing long-term risk premiums. But at its core, the framework is now spanning different scenarios of the world, which are a combination of transition risk and physical risks, and you have scenarios of net zero 2050 in there. You have scenarios of different political systems and way to deal with climate change. And we are calibrating not only long-term, but also short to medium-term growth and inflation, taking into account policies which will potentially come in to tackle climate change. In terms of the nuances, countries who are vulnerable and do not do anything about it, I think increasingly in the next few years, they will start to get penalized. We have the data now, and we are already building our ESG frameworks for sovereigns. we are going to feed this data to that framework as well. And once I think the key central banks start doing stress tests using this underlying same data, you will see momentum building up on being very analytical and very precise about these things, despite the uncertainty, as I mentioned, which is obviously embedded in the whole chain. But like, in all honesty, we can't just stand behind and close our eyes and say, oh, climate change is important, and then invest in countries who potentially will be wiped out by it.
This is very scary. और मैं थोड़ा उर्दू में बात करता हूँ, मुझे लोग हमेशा फीडबैक देते हैं वेबिनार्स पे कि मैं इंग्लिश में बोलता हूँ तो कुछ लोगों को समझ नहीं आता, दो आई थिंक कि इस ऑडियंस को सब समझ आएगा. तो आपका जो एनालिसिस है एंड जो रिजल्ट्स आर वेरी स्केरी. आप बेसिकली कह रहे हैं कि countries like India and Pakistan, economic impact in the long term of climate change, temperature change is so high that it almost wipes out a substantial amount of the GDP and certainly the growth. And you're saying the overall growth impact is as high as 20 to 25%. और so this is very very scary. And जैसे आपने बोला कि आपके ख्याल में अब जो investors will start to notice these results and start to incorporate it in their investment decision over the next 2 to 3 years. आपने जब से ये report लिखी है, and you've been talking to all the global investors and the large long-term investors, जिनके लिए ज़्यादा relevant है, feedback क्या है? Do you feel that they are worried about it and they are starting to notice it and they're starting to, incorporate it in their decision making?
So we've been road testing these results for the last few months. So report to मैंने अभी लिखी है, but I've been speaking to investors for some time now. I think the long-term investors are taking it seriously because I'll tell you why. Not because they have pressure from their stakeholders to do something authentic and serious about it. और वो साइंस जो है वो क्लियर है. या तो हम कह रहे हैं कि यार ये साइंस बकवास है और इसको फेंक दे. Totally. अब आप कह रहे हैं, हम लोग सारे कह रहे हैं कि ये climate science important है, so then you have to take the science seriously, and this is what the science is saying, right? अब issue horizon का है. आप physical risk कह रहे हैं कि by the end of 2100 अगर ये projections correct हैं तो country wipe out हो जाती है, right? Do we start taking action now? No, but I think the first step is to actually understand it and link it with your asset allocation policies and have engagement. So in corporate sector, हम लोग काफी engage करते हैं companies के साथ कि what are you doing to mitigate climate change? I think the same thing will have to be done with countries as well, as a first step. And in the next few years, my own view is कि हम लोग इसको wire करें in an institutional manner. कि in the next few years, अगर 4-5 years में countries नहीं जो आ रही on board with these ideas, and then we start putting penalties on them. So it will have to be a step-by-step process. And I think the reason why I think it will become more widespread is the moment the climate stress tests and ECB or Bank of England come online. Or secondly, PBOC is quite serious about it. That's the reason why China is serious about climate change is because it is important for them. ये कोई marketing appeal नहीं है.
ये जो आपने point दिया कि this is very interesting. You said that China is taking measures which are drastic, and they are taking climate change very seriously. And you are saying that it's just that they are doing it because they are conscious of the economic implications of climate change. And मैं इस ऑडियंस के लिए ये चाहता हूँ, आपसे सवाल ये पूछना चाहता हूँ इस ऑडियंस को हाईलाइट करने के लिए कि आप फिडेलिटी के ग्लोबल हेड ऑफ मैक्रो इन्वेस्टमेंट है. आप सबको शायद फिडेलिटी के बारे में पता ना हो. Would be great if you can tell a bit about Fidelity, your role at Fidelity, and basically what I want to highlight from this question is that when large institutional investors like Fidelity, how do you think about investing, and when you're thinking about investing in emerging markets, especially like countries like Pakistan, what kind of horizon you are taking, and what are the factors which you're looking at? The reason why I want to ask this question is that what we have seen is that over the last 5 years, especially, the flows to Pakistan from foreign funds have dried up in the in the peak, during the 90s, Pakistan was almost like a darling of foreign investors, and it was, right up there in the map for emerging markets. But especially in the last 5 years, we have seen this almost dangerous trend where it's not really coming up. So I would really love to get your insights to understand how do funds like Fidelity think, and what is your size and scale?
So Fidelity as a whole is, as you know, Levi, runs I think $3 or $4 trillion in assets, which is the reason I say 3 to 4 because most of it is in the US. So I work with Fidelity International, which is the non-US arm of Fidelity. So we have got around $780 billion in assets. And I am responsible, as you said, for the global macro and strategic asset allocation function. So my team works with almost every major European and Asian investor on macro and asset allocation policies. So at its core, it means thinking about equity risk premia, differentiating that risk premia, giving a EM guy, developed market guy, and then the styles around it, and then within fixed income, the different segments, and then different investors have their own horizons, their own return objective functions, and risk appetites. So that creates a lot of complexity into the whole exercise. On the global macro side, our focus is in three distinct horizons, I guess. So the tactical is 6 to 12 months, where my team contributes to our tactical asset allocation views, on the basis of which we run around $55 billion. Uske baad, then there is a dynamic asset allocation framework, in the sense like from 3 to 5 years, and then this 5 year plus, where the strategic asset allocation frameworks kick in. Most of the money or capital is run on strategic horizon. I know tactical asset allocation body stories create with the all our newspaper and journalist industry is focused on that. But the reality is that the vast majority of the capital जो है वो strategic asset allocation horizon पे चलता है. And it's and that's where these factors I mentioned are more relevant. Usme फिर policy risk becomes critical, and then of course the structural angle coming from central bank policies and so on and so forth. So that's in a nutshell what we're doing here. We are ramping it up. We are not the biggest player, but we certainly have the focus and hopefully the ability to put some frameworks in place.
Thank you so much for highlighting that. And as you said, that Fidelity, your side of Fidelity manages $780 billion. To put that in perspective, that's more than it's almost 2.5 times Pakistan's GDP. And so it's a big pool of money. And as you are saying that majority of the asset allocation decisions are based on long-term factors, not just on short-term factors. So the kind of work which you're doing has a strong impact on how capital moves to different countries. And so there are a lot of important lessons for Pakistan also to learn in terms of how can we improve on these factors so that we can attract capital, because certainly something has changed. So let me ask you these two questions, and then we'll open up for questions. I know there are questions already which are coming up. So the first question is, Salman bhai, why do you think Pakistan has the flows which were coming to Pakistan in the past have now dried down? What has changed in the last 5 years? Why in the 90s were we getting these funds, and why are we not getting them now? And then I want to ask you specifically on your views on short-term views on the markets, and my favorite question for you on commodities. But I'll come on that later. But first, please, would love to know your views on why fund flows have slowed down and how can we improve them.
I think it's a multitude of factors, at least to my mind. Pakistan trend growth has come down. So from if you're a strategic asset allocation perspective, so you would want to invest in a high growing country. Pakistan should not be growing at 3-4. Pakistan should be growing at 8-10, given its demographic profile. And I think people forget that we are competing with international capital. So अगर आप countries आप India, China 10-12 पे grow कर रही हैं, and you are growing at 3-4, obviously you are not going to get that kind of space, right? So trend growth coming down in Pakistan, and that itself is a multitude of factors. I'm sure you are well aware of those, more so than I am, but I'm just telling you, if you look at the trend growth, Pakistani trend growth has come down. And Pakistan should not be growing at 3 or 4, Pakistan should be growing at 8 or 10. And that's why I get a bit disappointed with the debate when I see in Pakistan where people are saying, oh, look at it, 3.94 pe grow kar gaye, kitna zabardast maza aa raha hai. I mean, if Pakistan wants serious capital, they will have to make a case for how they can grow at 8 or 10, not at 3 or 4. आपकी छोटी मोटी ऊपर नीचे changes आ जाएंगे, कभी आगे पैसे कभी कम नहीं है, but अगर आपने किसी से serious long term capital engagement रखनी है, तो Pakistan will have to figure out a way how to do at 8 or 10. I'm not saying I know the answers to that question, but that I'm just posing you that is the problem. And then that reduction in trend growth is symptomatic of many other issues, right? वो तो आपको outcome नजर आ रहा है कि it's a very powerful number, right? कि a country with such demographics, with such excess labor, excess I would say I guess capital is the short hair, but excess labor at least can't manage to grow at 3 or 4. Then how do you justify such high big investments? And again, we're competing with in international markets, and there have been countries who have grown much stronger than Pakistan relative to their trends, and for a long period of time, for a sustained period of time. It's not talking about 1 year or 2 years. We're talking about a sustained period of time. So that's at the very top level. In my mind, there's that number itself tells you the case mein issues hai. And then when you go into deeper, I'm sure you're well aware of some of the issues which are on the table. Then I guess the second question is, can you be looking ahead to Pakistan? I'm not pessimistic on Pakistan. I'll be upfront about it. लोग कहते हैं भी ये बाहर बैठे हुए हैं तो you have a negative view on Pakistan. I'm not, because I think जिस rut में हम हैं, it's a choice. ये हमने choice ली हुई है कि हमने 3 or 4 पे grow करना है. And I think if we change our choice, we can go at 8 or 10. So in that way, I can't be pessimistic, because somehow this is a choice which has been taken collectively.
Thank you for that. No, this is excellent. Thank you for giving us that insight. That essentially, that's the headline thing, which it's a growth, sustainable growth, or the lack of it, which is the main reason that people have seen this market for a long time, and the promise of high growth. Actually, you were one of the authors of N11 report, which highlighted Pakistan as one of the 11 next growth countries. And I suppose that Pakistan is able to deliver on that promise of being that camp of countries which can sustain higher growth by being
I think you're right. I think Nigeria and Pakistan are the worst performers when we did that report. If you look at N11 report, हमने की थी 2007. So अगर आप numbers देखें तो Nigeria and Pakistan are the worst performers. And people forget कि compounding का क्या powerful effect है. So if we use the last 20 years experience of India and Pakistan per capita GDP and the difference of it, and project it to the next to 2050, Pakistan and India का जो difference है वो North Korea, South Korea वाला है, because of the compounding. So in a year आप कह सकते हैं जी कि I'm a couple of percentage below India, but if structural अगर differences वो maintain हो जाएं, तो I'm not saying they will maintain, many factors at play, but अगर आपके last 20 years का जो difference है वो project कर लें, तो then you're talking about North Korea, South Korea situation by 2050. So within our generation, people also forget that China ने अपनी transformation within my career की. I mean, and I'm not, hopefully not done with it yet. So China was a very different place in 2000 now. So it is possible and it is doable. The question is if you want to do it or not.
Absolutely, this is you're right. That thank you for highlighting those examples. China being the biggest one. That it's not even a generation; it's in a career that we've seen China rise from a poor country to a very rich country, and Bangladesh being another example where we have seen that impact of converging.
Exactly. Bangladesh is already coming online. Yeah.
Yes, absolutely. The last question from me, and then moving to the questions from audience. Global market outlook. I'm reading a lot of very pessimistic forecasts that some people are expecting a steep correction in the markets. I would love to get your views on how do you think, how does the global market outlook look like?
So I'll be honest, I think this bond market rally, I still can't get my head around it. Because the pricing, especially the real rates collapse, it somehow shows the growth is going to collapse in the next few months, which we don't see it in the data. There's a lot of pent-up savings. Growth momentum is going to slow. Of course, you can't have ISMs and PMIs at 60 forever or 60 plus forever. But this idea that we are in secular stagnation in the next 6 months is tough to reconcile with. And the other one is inflation. We have been sharing for a while now that there are persistent factors in inflation, and the Fed is underestimating them, and we think that is going to become more and more clearer going forward. We are still pro-risk in our tactical asset allocation. We have been pro-risk for many months now, frankly speaking, and I think still the Fed is pumping money, and the fiscal stimulus. Another fiscal plan is obviously in the shape in the US with these pent-up savings. Even though valuations are stretched, don't get me wrong, valuations are stretched in some areas. We think it makes sense to be pro-risk, but the sweet phase is gone now. It's going to be harder to generate that extra, return. I think. Our still high conviction view is the bond yields go up, and inflation proves to be more stickier than has been the case. And it's also where the complexity arises, because with the reaction functions of the key central banks changing, we don't know how they will respond to inflation. I mean, they are characterizing it differently already. So ultimately, the response to inflation will be exactly clear नहीं पता क्या आएगा. Because debt is so high, because we have all enjoyed this rally and the increase in wealth. But as an economist, you should understand this is all debt. Somebody will have to pay for it somewhere. And the question again goes back to timing. कैसे resolution होगी, whether it will be a more benign resolution or if you can get into trouble. But we are beyond World War II levels in public debt in developed markets. EM debt is also rising, and inflation to a certain extent is necessary for the system, but you always run the risk that it gets out of control, and in EM countries like Pakistan, it becomes a political issue and a social stability issue. So there's a narrow road there from a more medium-term perspective, but from a short-term perspective, we still think the policy liquidity is still ample. Yes, it will become this trend will become less steeper, but liquidity is still positive.
Okay, thank you. So you're not pessimistic. Thank you.
Not in the next 6 to 12 months. Yes.
Moving to the questions, I'm conscious that I've taken a lot of the time. Usman is asking that what are the implications for your work on climate change on emerging economies, particularly in terms of funding for infrastructure required to mitigate climate change For example, renewable energy, sensing the existing infrastructure for extreme weather events, rising water levels. Doesn't it become a vicious cycle that because of lack of investor capital, going in the countries which are more prone to climate change, they would have lesser capital to invest in mitigating climate impact of climate change?
Not necessarily. If the country has a credible plan to bring emissions down, I think investors will engage with them. What we are showing is that these, based on science, or at least, and all the assumptions, uncertainty, these countries are vulnerable under these scenarios, and there are multiple scenarios which can. And it's a complex exercise. There's other scenarios of net zero, divergent net zero, and so on and so forth, which can come into play. Let's say you're talking about sovereign, if the sovereign understands it and raises capital to mitigate it, I think investors will engage. But agar sovereignty understanding kar raha, then it becomes a problem.
Got it. So thank you. Essentially, you're saying that right now it's a stage where we as a country need to demonstrate that we are cognizant of this risk and we are willing to invest. And at this stage, you will get the capital.
But that may not remain the case in 10 years from now.
Got it. Because then they'll penalize you that you were not.
Because as the education grows, वो system में आ जाएगी. And more climate change events जब होंगे, पाकिस्तान में flooding हो रही है, इंडिया में हो रही है, चाइना में हो रही है, वो उन्हीं countries में हो रही है जिनको इन्होंने vulnerable in projections ने map किया हुआ. So climate science is aware of it. Now the investor community is also becoming aware कि ये क्या climate science कह रही है, right? So ये optically आपके लिए बड़ा difficult हो जाएगा कि let's say कि मैं इस emerging market में जा रहा हूँ जो कि highly vulnerable है, हर साल वहाँ flooding हो रही है, तो it will become difficult to justify investments unless आप as an entity आपको पता है कि ये issue है and you are trying to solve a problem, and then I think the capital will come.
Thank you. Moving to the next question, Avyas is asking, what is the risk premium of frontier countries given emerging markets debt to GDP has increased compared to frontier countries? And if the delta continues to be an issue for emerging markets, then the credit in emerging markets will be more at risk as GDP takes more of a knock, making frontier countries relatively more interesting. Is that fair? EM versus frontier.
EM versus frontier. I think on that one, I think from a climate change lens, it so happens that frontier countries are vulnerable from that perspective. Now the question between EM versus frontier, to be honest with you, it's a bit further away from my focus area these days. But ultimately, idiosyncratic risk is critical, as we know in frontier.
So next question from Jalid, he's asking, what role can investors play in accelerating the transition in developing markets to a low carbon future? Where developing countries like India and Pakistan face such stark impact of climate change, their policies still lag behind those in Europe. Developing countries are still investing heavily in fossil fuel-driven economy despite being signatory to UN SDGs. So he's asking, what can we do?
The first step is to acknowledge there be a problem and embrace the science of it. And for countries like India and Pakistan, they just have to look at China. वो अपना पूरा economic model wire कर रहे हैं around climate change. It means certain sectors will have to take the pain, and other sectors will have to be given incentives, massive incentives. From another developing country perspective, is कि भी carbon price को कैसे price करना है appropriately without going into a recession and without triggering inflation increases. And then lastly, agar aapne technology, most of the technology comes from developed world or China. We will have to make sure that वो technology हमें भी मिले, because so that we can contribute to bringing emissions down from a global perspective and save our populations and save our economic system. So इसमें COP26 is an important one, and I hope Pakistan can articulate that. They need to be part of the global community and part of the solution, not of the problem. I think from an investor perspective, credibility matters. We understand this is a long-term issue. And for long-term capital to come in for these solutions, आपका अगर infrastructure, both regulatory and institutional infrastructure to solve this problem comes into play, capital will come, because we have stakeholders who want that to
The
happen.
next question is from Sanar Khan. Fund manager. He has recently joined us to lead our relationship with corporate with companies, and he's asking a good question. He's saying that companies in Pakistan have started to become aware of this challenge of climate change. When he's dealing with companies, how should he engage with them to help them create a risk framework to begin with? What is your experience on interacting with other companies in other markets on this conversation on climate change?
So here, I think our firm has done a lot of work. As you know, we have 150 plus analysts and we cover more than 3,000 companies globally. I would highlight to have a look at our recent ESG survey, which was a detailed report of the kind of questions and interactions we are having with companies. I think it gives a good template for engagement. Ultimately, there's a lot of data and framework, especially in DM and major EMs, which is coming through, where we can see emissions kya hai on the basis of different definitions, and then link their business plans to a temperature pathway. Ki aapki emissions zero hoti hain ki nahi? Net, i.e., is your business model consistent with net zero by 2050? So there's a lot of work going on there. And then that requires data infrastructure. But from your perspective is that agar aapne international capital at some stage lena hai, it will become a necessary condition. I think we are already on that journey. It's a matter of time. It becomes a hygiene factor like financial or non-financial factors, like financial factors are.
Salman bhai, इसमें मेरा एक added question है कि आपकी report one of the documents, any other report or book or study which you think that would be useful for us to read, and also useful for us to show to other companies and other stakeholders to make them aware of this challenge and the benefits of solving it. Do you have any recommendations on any good book or any good report?
As I said, I think the ESG survey by Fidelity is a good starting point. It actually goes into deeper into the issues, sectors mein kahan hai, globally kidhar hai, multiple dimensions, and it's more specific rather than saying ESG bada acha hai, or it goes into the nuances of it. So I think it's an important starting point. The other ones are there are few studies which basically show that markets are starting to differentiate on the basis of ESG. And I've forgotten by the top of my head, but I can share with you those couple of studies where you see market return profiles now starting to react to the ESG risk premium, if you will. So the companies, there are winners and losers effect, which is starting to take hold. And so from an investor perspective, that is very important. And then from a company's perspective is if investors are looking at it, they have access to that data, they will start to put penalties on non-financial factors as well.
Thank you. And I published a report on ESG, and I think I tracked MSCI emerging markets. ESG index has outperformed the other index, but I suspect some of that is also data bias, just in terms of the control.
100%, there's a sector issues there, but I think this study, I'll share it with you, it tries to correct for those biases like size biases and sector biases. So even when you neutralize it, you see a residual effect which is coming through.
Thank you. A slightly unrelated question, but important one nevertheless. Anas is asking about your comments on the digitalization and the investment which Pakistan is getting in tech and in digital startups. So you might be aware that so far this year, Pakistan has received $20 million in VC investments. KTrade was one of those investments where we raised 5% of that. And this is like more than double the amount of investment Pakistan got last year. So do you have any opinions on why global investors are investing in startups, and do you think this trend will continue?
I think, as you rightly pointed, it's a global trend. I don't want to burst Pakistan's bubble, but overall venture capital and startup investing have gone through the roof. And if anything, Pakistan is underperforming, if I can be a little bit realistic about it. i.e. Pakistan, given the strength of the wave, if you will, should have benefited more from it.
Yes.
I think going forward, we have some concerns about exuberance in some areas. I mean, SPACs for one, and indiscriminate buying of technologies. I mean, again, maybe you can say I'm a pessimistic person, but 90% of them are not going to survive. So we have to be careful about where we're investing. Valuations are on the high side. So it's a good time to raise money. But for investors, we need to be cautious about it, because we also know that public markets have squeezed out a lot of people. So returns have come down. So that's why people have to take riskier bets. But diversification is key. You have to diversify your plays across countries and across sectors, across the problems you're trying to solve. However, Pakistan has huge opportunity because you're starting from a very low base. I really hope the government will become more pro this kind of investment, and the infrastructure will be there, the regulatory setup will be there. Because, as I said, if we need big capital, reputational risk is important. That's something but we need to understand. $5-6 million देना different question है, $50 million, $100 million देना different question होता है. उसमें reputational risk is very, very important. We are not just profit maximizers. We have our reputations to be careful about as well.
Absolutely, thank you. And because he asked for my views as well, that's exactly what Salman Bhai said. Pakistan is raising money, and this number should go higher because of a country of Pakistan's profile and size and population should be getting far greater amount of money, because it was India in the same time period. I think India was 10 billion, something like that. So it's not a multi-factor of like 10 or 100. It's like bigger than that. And the reason for this excess capital available, Salman Bhai has already mentioned that in two questions, like globally, there is a lot of capital available because of the printing which has happened. And this capital is chasing their assets now because the returns in the traditional assets have been lower. So we should be able to raise more. But as he said, 90% of startups fail. So they do fail globally. In Pakistan, it will be no different. So, and he rightly pointed out that raising 1 million, 2 million, 3 million, 5 million is different. Raising 50 million is different. So a lot of companies who, unlocking the first 5 million is a very different challenge compared to unlocking the exit or the 50 million. And that's where country risk becomes really, really important. So, and I think Pakistan startups will learn that. Moving to the next question, Avais is asking, are you a proponent of MMT? Perhaps you can tell us about MMT as well a little bit, and then are you believe in that?
I won't characterize it as a supporter or proponent. That's not my job. My job is to understand what is going to happen without any view on whether it's the right thing or wrong thing. So just in terms of modern monetary theory is this idea that if you're a reserve currency, you can print money and spend it without implications for your creditworthiness. I mean, in a nutshell, that's what MMT is. It's a dangerous idea at its core. Pakistan should never try it, for sure. But I guess the question is whether the US can get away with it. I mean, there are some arguments. US is a reserve currency, so they have that space, if you will, to do that. We have moved towards that after the pandemic and the way government balance sheets came into play. But at the same time, there will be price to pay. I mean, you're seeing in China how view towards capitalism is changing. I think the risk factor is the Western system also starts to show some dimensions of that, where the economy is doing well is a bit different from generating returns on investment. So we are, I think, things are changing. I think significantly and seismically globally. Mindsets are changing, and more importantly, ideologies are changing. Economic ideologies are changing. So I guess from Pakistan perspective is I'll go back to the point I mentioned earlier. We need to figure out how we are going to go at 8-10, frankly speaking, because 3 or 4 is not going to cut it.
Thank you. Just time for, we have 6 more minutes, so we'll squeeze in 2 more questions. One, Jalid is asking he's asking about how do you fairly price carbon so that the developed countries don't feel that they have the short end of the stick.
Yeah, developed countries will not have the short on the stick because they're also talking about border adjustment taxes and other things.
Sorry, developed. Sorry, he asked the developed countries that don't.
Yeah. So carbon, I think there are multiple ways which are going through. So Europe is taking the market mechanism way. China is also building up a market for carbon. Okay, it's a regulatory, effort. Because it is a public good at the moment, which is an externality, and we have known from economics that the only way externality gets closed is through government interventions. If that was not the case, the market would have done it already. So that market failure will need a direct solution from the government. There are ways to do it. You can do it through directly, i.e., like Europe does to put a price on carbon, or you can do it through indirectly through subsidies and taxation, through regulation, and so on and so forth, and have a calibrated path towards it. Because it's unrealistic to think we can go off fossil fuel overnight. I mean, yes, if we shut down our economies, then yes, we can go off fossil fuels overnight. But I think the calibration path will be important because some of these scenarios we are building also take into account that the governments may have to do it rapidly, these adjustments, because there is big weather event or political will changes. I mean, just a small example, the floods in Germany. It's having an effect on the approval ratings of the Green Party, for example. So what is to say, okay, tomorrow if there isn't, God forbid, a big climate event, many lives are lost, and that doesn't have political implications. It can change policy. It can move people away from what is important. The pandemic actually showed us that, right? So and it's very difficult to model. It's very difficult to map out analytically. But if you believe the science, even though we don't know the timings, these are live risks within our time frames.
Thank you. Salman bhai, the last question is from Arsalan Sumro, and he's asking that there's a disconnect between gold prices and the US monetary base. He's citing that Chris Woods also expects that gold should go higher, 5,500. How bullish are you? Bullish on gold? And
I'm bullish on gold. I think given the system and given the D-link, I think with all the money being pumped in, I think as a hedge in your portfolio, you should have gold. I don't think we should think about it as $5,500. I think you should think about it, if this giant experiment fails, you have something. I think that's the way to think about gold.
Thank you for your time. I think a lot of people think of Bitcoin like that as well.
Yeah, the problem is you can you can switch it off.
I know you're not a fan of it. Thank you so much for your time, as always. It has been extremely insightful. It has been extremely important, and we learned a lot. And for sure, based on your work and the fact that firm like Fidelity is working so much on this, shows that climate change is a factor which will impact us from both as an investor, and it will substantially drive the financial returns which we get on assets. So it's not a theme which is a short-term theme. It's a theme which we will probably grow into over a lifetime, just like we grew into the growth of China and technology and digitalization. So this will be a major theme. So your time over here has helped us learn about something which I think is very, very important for all of us. So
thank you very much, Ali bhai. Thank you very much for all your audience, and good luck and have a nice day. Thank you. Good afternoon.